Think about cash flow. When you've bought the right assets, they'll pay you forever and ever and ever and ever and ever, meaning that your kids will eat off of it, that your grandkids will eat off of it, etc.
Wake up, it's time to be free. Wake up, was blind, now I see. Wake up, it's time to be me. Wake up, my mind is the key.
Wake up, it's time to be me. Wake up, my mind is the key.
Welcome. It's Jullien Gordon here with another episode of the Daily Jewels, where I drop nuggets of wisdom to help you increase your degrees of freedom. Doesn't matter how many college degrees you have, the only degree that really matters is your degree of freedom. Doesn't matter how much money you make, the only thing that really matters is how you actually make money. So today I actually want to talk about the reason that I bought 3 duplexes at the age of 35. Why I bought 3 duplexes at the age of 35. This was a key strategic move for me because most people, when they think about retirement, they think about retirement at the age of 65. Now, I have no plans of retiring. I love the work that I do. Most people who are rushing to retire or trying to retire early are usually doing that because they hate what they do, right? My goal isn't to really stop working. I want to continue to give as long as I can possibly give. But I did this strategically, primarily for my family. If I was single and I didn't have kids or anything like that, I probably wouldn't have made this particular investment. But I want to make sure that my family is set and safe as we get older. And my earning potential rises as I get older. But for a lot of people, it decreases for whatever reason, whether they just aren't continuing to learn and sharpen their skills. The economy has shifted and they haven't caught up. They can't physically do what they were doing before. Like when you think about athletes, many of their careers are done by the age of like 30s, early 30s. Their careers are done for a lot of athletes. Baseball players can, and Tom Brady and people like that can go up to like 40. But what do you do if you still have 40 or 50 years of life left in you at that moment in time? You made a lot of money on the front end when you had all this energy and vitality, but on the back end, how do you make sure that whatever you created there is actually going to sustain you there? So for me, one of the key factors was, and why 35 was so significant, is actually building up. I believe that everybody can be free by 40. I'm writing the book Freedom by 40. And 35 means that if I get these income properties at the age of 35, right? And by 65, usually there's a 30-year mortgage. By the age of 65, those mortgages will be paid off. Those mortgages will be paid off in full if I don't pay them off earlier, right? And therefore, at the age of 65, if I've bought quality homes that aren't deteriorating and that I continue to update them and keep them sharp, at the age of 65, that is going to be all positive cash flow. There will be no mortgage there whatsoever. So I will have positive cash flow from 3 different properties, which I know when I add up the numbers would be more than enough to cover my living expenses, my wife and I, our living expenses, even if I were to do nothing. Now, again, I'm not trying to retire to just go sit on the beach or do anything like that. It's just really setting up my family for success and also setting up legacy. I'm a cash flow guy. So by that, I mean, I'd probably take $10,000 a month in perpetuity, then take $200,000 right now, right? If you had a choice between taking $200,000 right now or $10,000 in perpetuity, which would you take? I'm a cash flow guy. I'm trying to build cash flow. Because the thing about cash flow, the reason I say perpetuity, think about cash flow. When you've bought the right assets, they'll pay you forever and ever and ever and ever and ever, meaning that your kids will eat off of it, that your grandkids will eat off of it, etc. Like when I see some of these houses here in Brooklyn, these multifamily homes that people bought in the 20s and the 30s for what seems like nothing today, their families are either still living there or their families are still cash flowing off of the investments that previous generations made. So this is why I like real estate. For me, stock market investing and things of that nature, it's really, it's gambling in a lot of ways. If people knew, right? If people knew what the returns are, then everybody would be making money. But that's not always the case. Now, the economy has been on a tear. The real estate prices are at their highest. And so is the stock market. But everything operates in cycles. Now, since I have no intention of trying to flip these properties, I know that there will be cycles in real estate, and I'm willing to ride out those cycles because this is a long-term game for me. One of my places has Section 8 tenants. Actually, two of my places have Section 8 tenants, meaning that regardless of how the economy goes, the government is still paying that rent at fair market rate, right? The government is still paying that rent for the spaces where I'm able to house Section 8 tenants. And I met my tenants when I just did my 36-hour trip to New Orleans. I met my Section 8 tenants for the first time, and they are absolutely amazing people. Section 8 tenants always get branded as they're going to mess up your place and things of that nature. The family that I met was so amazing. They told me their Katrina story. They got displaced to San Antonio for 5.5 years before making their way back, and this was the first place that they came to after they came back. So this is how I've set up my life, and now that I have these assets in place that I know are going to pay me and my family for the long term, that actually gives me more freedom to take risk right here and right now. It gives me more freedom to take risk right here and right now. The rest of the money that I have, I want to, beyond my emergency fund, I want to pour that back into growing this business that I have at the Freedom School. I want to grow it. I want to expand it. I'll invest in advertising. I'll do whatever it takes to get this message out there. But I can feel more comfortable taking bigger risk now because I know that I've set myself up. Most entrepreneurs, when they start out, they're not investing in a 401k. They don't have a pension plan or anything like that. And so they may be making money now and they may be making enough to actually pay their bills and things of that nature. But they haven't set up anything for retirement, right? In the way that when you go to a traditional employer, those things, they ask you those things when you're signing up. As an entrepreneur, you're just trying to make money at first and make sure you're making enough to pay the bills. Then you get to a space of abundance. You have more, then you might hire people, and then you keep working and you try to grow this thing so that you are giving, and giving so much value to the world that you are able to receive some of that back in the form of revenues. And if your cost structure is right, those revenues actually lead to profits. So this is how I think about my short-term and my long-term investments. By having those anchors in place, that actually frees me to take more risk right here and right now, regardless of whether the economy is up or down. And so this is why it was so significant for me to that I went on a tear, and so significant for me to buy all of these properties here now at the age of 35, because 65 is like the symbolic retirement age for most people, even though I have no intention of retiring at 65. I'm going to keep giving and keep going as long as I possibly can. And because I'm doing what I love, you know, people say I got a baby face, you know. And that's because I'm doing what I love. Nobody knows I just told you my age, but most people don't know my age. They think I'm like 22, right? But that's because that's what it feels like and that's what it looks like when you're doing what you love on a daily basis. So I just wanted to share that long-term and short-term investment strategy with you. If you're an entrepreneur and you're making a little bit of abundance and you're like, wow, I'm feeling good right now, and you don't know how to pour all of that back into your business at this particular moment. One way to set you and your family up for success in the long term is actually to go get some income properties. And the thing about duplexes is that duplexes, typically one side of the duplex can pay for the entire mortgage, which means that you're cash flowing off the second side. So if you can get a triplex or bigger, go for it. But duplexes have been a very safe investment for me. I didn't do the duplex here in Brooklyn. I have a 3-family here. Those duplexes two are in New Orleans and one is in Oakland, California. So sometimes you got to go to smaller markets in order to actually win from a real estate perspective. All right. So I hope that this blesses you. This is Jullien Gordon with another episode of the Daily Jewels, and I will catch you in the next episode. Peace.
I hope these mindsets, metaphors, and methodologies blessed you. If you desire more freedom, go to getfreenow.com to subscribe to the show on iTunes, YouTube, or Facebook, and get 4 of my best courses in the Freedom School for 100% free. I hope these mindsets, metaphors, and methodologies blessed you. If you desire more freedom, go to getfreenow.com to subscribe to the show on iTunes, YouTube, or Facebook, and get 4 of my best courses in the Freedom School for 100% free.